Hello and welcome to the Crypto Club and Digital Assets Weekly Catch-Up on Zoom. It's Sunday the 17th of March 2024, which means it's just a month away from the next Bitcoin halving. But whether we'll actually talk about that in this session, who really knows? If you're new to crypto and you're hearing all these bewildering phrases and terms like halving, and ICOs, SCOs, TGs and everything, stick around and hopefully we'll cover some of those today. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time, and everyone's welcome, novices and experts alike. So if you'd like to join us, there's details in the link below. And if you'd like to talk about the projects they're working on, fantastic. We even do a Gone in 180 Seconds session, which is where you get 3 minutes to talk about your project or initiative without the aid of PowerPoint slides or video or anything. Just talk about what you're actually doing. So hopefully something for everybody this week. Stick around. Do click on the like, the subscribe, click on that bell for a reminder as well. Make comments. Even more importantly, come on to a future session. So with that, let's see who's going to come and join us today. Hey, Sebastian.
Hello.
Hey, hello. How are you?
Yeah, not bad. Glad to be here because last time I think it was a year ago or something. So happy to be here again.
Yeah. What brings you back this time then?
I mean to catch up and to tell some news from my side if you're interested, to see what insights I'm bringing to the table and
Yeah.
things like this.
Oh, definitely. Well, we'll see who else joins us, and you can share what's been going on in your world. Yeah. What was it about a year ago that you last came?
So last time, if I remember correctly, the discussion was more, it was crypto, what was happening in the crypto space, and then also NFTs. We talked about a bit about encryption so basically we did a comparison between encryption, cryptography, and stenography, if I remember.
Oh, yeah. Yeah, excellent. That's good. Well, we'll see where we go this evening in that conversation. I see you've just been joined by Anthony as well. Hey, Anthony. Or maybe he's just connecting at the moment. So he's always got fascinating insights in terms of what's going on with real world assets, whether they're tokenized or not.
Yeah, exactly. I think that should be the discussion for today. Because it seems that it's finally taking place.
Definitely. Hey, and we're joined by Fernando as well. Hey, JC. He was on cam. He was on camera for a moment, and then he's disappeared off again.
Yeah, I'm not shaving today, so
it's not a problem at all. Yeah. So we've got a few people joined us then. So yeah, maybe Sebastian, tell us what's been going on in your world. What's keeping you occupied now?
So honestly, I was waiting for this time for the tokenization of real world assets, and I think this is the perfect timing. So, for instance, some time ago, like I also tried to engage with people and to start to tokenize assets, but the infrastructure wasn't built enough, and also maybe the people didn't believe that we found the right solution. But I think now I found a project, for instance, that's tokenizing real estate addresses. And it seems to be working quite well. Obviously, it can be improved a bit. I don't think we have reached the stage to tokenize like buildings yet. So probably you need to start with a bit smaller things. And I would say it's the same thing with art. So I mainly focus on art. I am not into real estate, but it's just that I saw that project and I said, all right, let me test it and see how it works, right?
So I'm seeing already. I was already watching Mr. Abel's expression as he joined us. Tony, good evening, welcome. I'm sure you've got some comments on that.
Yeah. So, for instance, what I want to say about art, the thing that I have in mind. So we have all those nice objects in museums and in galleries. So I think it's a great idea to have a digital copy because when someone is doing art conservation and art preservation, we all know that things degrade over time, no matter what materials we are using, even if we used one of the most expensive materials in the world. Unfortunately, sometimes that's the laws of physics, right? And we can't change the laws of physics, unfortunately. So that's why I think we should have an exact and as Yeah,
Like
yeah,
a digital replica.
yeah, exactly.
Yeah.
But
Okay.
to be very accurate, right? So
Mhm.
to be like with a lot of details, because at the moment I don't think we reach that accuracy that is needed, and I think that's what we are looking for. But that accuracy, I would say, is more, or at least from my side, from my research and development, it comes more because for instance, I or yeah, so I'm talking just about myself. I don't have the right technology to record that much detail, right? So for instance, I'm using a laptop. The laptop is quite good, and when I'm recording something, like the camera is not that great. So that's why I'm thinking and then the other version, the other thing that I can do is like to for instance, to take pictures or to have that object in front of me, and then to try to do it on PC to make it 3D, right? But in that way, it takes more time, and also, yeah, I'm not sure if because I might change some details. So I would say the right approach will be like to have a proper scanner, like a poly scanner, a proper one, and then yeah, it'll be much easier and it'll be more realistic, and yeah, in this way. And then yeah, I think we have the infrastructure already to bring it to the chain, to put it on blockchain. But yeah, or I don't know about that device that can help us to.
So, Sebastian, I'm going to offer straight away. Anthony's rejoined us, and you were talking about tokenization of real world assets, and you were talking about the challenges of technology. TPX Exchange, I think, is one of the leaders in this space, in that they're certainly exploring that amongst other things. I'm assuming Anthony's having technical problems this evening, because he's usually able to offer some great insights into this, and he's reconnecting his audio at the moment. But let's hold on to that thought for a moment. As soon as he comes back in, we'll get him to share his kind of insights around the stuff he's doing, because there's a real overlap there, definitely. But meanwhile, it's interesting you're talking about like the digital representation, and whether your laptop is sufficient and all this kind of thing. So I was doing some stuff with an art gallery a while ago around what level of quality you needed to like effectively take a digital image of fine art. And it's definitely, there are capabilities there. So we'll see. So Mr. Abel, can you speak now?
Hopefully. Can you hear me this time?
Hey, we can. We've got you.
Yeah. I had too many versions of Zoom on my system. Took some fixing. Too many of those unexpected upgrades that they put in there.
Yeah, always 5 minutes before you join the call as well. It's always an upgrade is required. Please click here.
Classic.
20 terabytes update or something. Yeah. So Sebastian was just chatting before he joined, and as you were there as well, around tokenization, real world assets. I know this is your sweet spot.
I keep warning you not to ask me about these things when I get online. You don't take up all your bandwidth.
Well, it's like you are a leading expert and practitioner in this space, so always good to get your insights on that. But I think Sebastian was saying that he thought that some of the technology may not quite be there. How are you finding it at the moment?
No, you have to do a systems approach. So we can't use any of the chains that are currently in vogue at the moment. You can't build this on an Ethereum chain. The issue is ones of taxation, of legal redress, of what the nation state itself typically wants for, in our case, real estate, their assets in the nation state. So just because you can tokenize it doesn't mean the tax man's going to let you get away with it. And so you have to build your chains on a systems approach that actually take into account the stakeholders. So the comment to saying we're not there yet. Well, current technology is not. The stuff that we build over the last 8 years absolutely is, because that's why we built it the way we did it. So we have a 4-chain ecosystem that we built specifically for treasury, tax, for regulators, for the Bank of England, central banks, still staying true to what many of us wanted in terms of money independent from the financial system. I can certainly go on at length about that subject matter. And so it's still the right version, I think. It's not the US version. It's not central bank digital currencies. We're not a big fan of central bank digital currencies here, but having money that's independent of our central banks and governments is something that we're very keen to pursue.
Mm. I think it's always interesting. I often use TPX as the example of actually hitting the multifaceted challenges of these kind of things. So it's not the tech. The tech, I think, is one of the least important things. It's the legislation, it's the regulation, it's the taxation.
100%.
It's all of those areas. And they're the ones. It's funny, on a chat group earlier on today where someone was saying, "Oh, we can just do this because it's crypto," which means we don't have to comply with regulation or legislation. It's like, no, the world doesn't work like that.
Yeah. Well, see, we had to work with 120 years of primary legislation, secondary legislation, and case law to get what we want out there. And unless, if you're a technologist, you don't think about these things. You just think about what the beauty of the tech is, the code is, and how it can make great things happen faster, which is a great linear engineering path. And there's value in that. But you can't do it without the context of where you want to deploy it and what do you want to use it for.
Mm-hmm. That's where it gets interesting. It's interesting. Elena's just joined us, Elena, because that links in nicely with things like the metaverse and that. I'm beginning to bring together the digital and physical through a virtual perspective and that. This is why I think we're going through a very interesting time right now, because we're just at the point where the technologies are able to intersect. And I've always said it's that like the triangle of new emerging forces of blockchain or ledger technology and AI and IoT as three of those kind of things. When they kind of like visualize themselves or appear or materialize themselves in that crossover between the virtual and physical world, I think it's a fascinating place.
Well, I might go one better on you there, Gary.
Okay.
On that Venn diagram, add another circle, and I would call it exigent requirement.
Oh, now there's something I don't understand. Tell me more.
Okay, so
I'm going to ask what that is before Elena asks. So
okay, exigent requirement means you have no choice. So what we're looking at is long cycle economics and our financial and economic systems, and without trying to go too hard into it, is as a society, as an economy, as a global economy, we've all been here before. Too much debt, too much inflation. Where do you go? And the problem is that there's nobody alive at the moment who saw the last time this happened. Mm-hmm. So last time happened in the 30s. If you're still alive, still alive now. You knew what was going on in the 30s, and you're still alive now. So the end result of this one is when we go to banks and central banks and regulators and the government, they ask us quite often who we designed this for, and we tell them very plainly, we designed this 8 years ago for you guys because you're the guys with the biggest problem. Whether you fully realize it or not is another matter. Whether you fully understand these technologies or not, well, I can assure you they don't. But the need is acute because in the current system, the level of built-in inflation, which they're not declaring in the RPI or CPI figures, is about 3 times what the CPI figure is. So the inflation is much worse. On the monetary inflation is much worse than they're letting on, and they don't have anywhere else to go. So we always use this lovely analogy of they've been kicking the monetary and fiscal can down the road. The can is disintegrated. The road is disintegrated. It's now a bunch of forest and trees, and they don't know which direction to go now. That's where things are at our global economic financial system.
That's the interesting thing. I'm always talking about the intersection of the virtual and the physical world, but you've also got the intersection between what we're being told is going on with the economy and what is going on with the economy. So I always use if I want to know what inflation is, it's how much did one of these shirts cost last year? How much is one of these shirts this year? Divide one by the other, and that's the real inflation.
Yes, but that doesn't factor in how much our technology has made those shirts cheaper to produce.
Mm-hmm.
All right, and then when you start to understand that, you understand what true inflation is all about. Because in theory, our pound, let's say your shirt costs £10. All right, at this stage, and you bought that same shirt. I'm not looking at your shirt specifically here, so don't take offense. You bought that shirt 10 years ago. Okay, right? And you expect to go out and replace it this year. in theory, our technology should allow you to buy 3 shirts at 10 pounds, right? But instead, you're buying 1 shirt at 30 or 40 or 50 pounds. Okay, where did all that value of our money go?
Yeah.
Right. And when you start to understand the deep economics of these things, which, by the way, they don't teach you in school or university or in any textbook, and if you mention monetary inflation on air on Sky News, as I did, they take you off air very damn quickly.
Right, just going over to sport. We just heard
Yeah,
that.
exactly.
Yeah.
They gave you about 3 seconds to wind up. It was quite funny at one level, scary at another. And so, that's the world we live in. And so for all of us, we get a choice as we go forward. Really about educating ourselves, because no one else is going to do it, about how money really works. Not currency, which is different, but money. And money is a store of our labor. So when we do our 12-hour shift, whatever, and get paid for it, in theory, that should be directly representative of the labor that we put in and its value in the open marketplace. But that gets horribly eroded even while you're sleeping. And that's the issue that we're facing currently as a society, as an economic system.
It's a fascinating thing, because when you start looking at what's going on, I keep saying, when you look at the indicators and people are saying, are we heading for a recession? It's like, no, we're heading for a depression, and we're currently in a recession. It's just that no one's noticing it, kind of thing.
It goes down to nominal and real value. You'll hear more and more about this when they talk about the stock markets. So everyone says, Yahoo, the number goes up. It has gone up, right? But that's because all these companies are adjusting for inflation. Are you actually making money? Well, the number goes up, but the value of the money you're making is actually going down at the same time. I would argue it's going down a lot faster than it's going up. That's why when you go to the store, you can't buy much.
Well, I guess that's why, as well, it's really interesting. I watched the speech that Michael Saylor gave in Madeira recently. And Michael Saylor, for a long time, he's for those who don't know, CEO of MicroStrategy. So MicroStrategy, a business intelligence and analytics company, very successful one, who started hedging by purchasing Bitcoin. And it's really interesting because everyone thought, he's just, he's speculating or whatever. And he said, well, the reason I'm doing it is not because I want Bitcoin's price to increase. It's because I think fiat currencies are going to collapse. And it's a hedge. It's a hedge against it. So it's simple as that.
There's some other stuff in the background, but go on. I can tell you about it in terms of hedging in the market.
Yeah, but it was fascinating. Is Talk in Madeira, which is on YouTube if people want to watch it, where he was just laying out this whole new decentralized, distributed, crypto-enabled world, and how transformation it's going to be, because the current systems are not going to last. Just like any other thing, everything lasts for so long, whether it's a company or a technology, and then it gets overtaken, or it collapses, or it fails, or you have a systemic failure or something. And he's very much of that mind that the current financial systems are going to go through a seismic shock episode at some piece.
I'll give you a couple of shockers here. Over the last 2,000 years, every currency ever in existence has always gone to zero, without exception. Yeah. Okay. Here's another scary stat. Yeah.
I think is it the British pound that's lasted 140 years or something, which makes it one of the longer lasting ones. I think the average survival rate of a nation state currency is 37 years. You've probably got more interesting stats than that. But
I've got a whole bunch of other stuff, which is market indicators. So right now, we're expecting 60% default rate on mortgages in the United Kingdom. Okay, that's a hell of a big number. Now, default doesn't mean they can't pay; it's just they miss a payment. So to give some proper analysis of the number, we're also getting told that the affordability of new mortgages is the Bank of England's trying to pressure all the banks that they make it 9.5%, even though the inflation rate's only at 5% right now. So they're trying to force the new loans mortgage origination that can only be done on affordability if the person borrowing the money can afford a 9.5% interest rate, nearly double what we have right now. If you look at the US, throwing some scary stats in here, and looking at how the hedging going, so you mentioned Bitcoin. Obviously, gold prices are up. Bitcoin prices are up quite substantially. They're going there because they don't have a lot of other choices, and Bitcoin's more liquid than gold, so more attractive in many ways. Still an extrinsic value asset, I stress here. So it's only as good as the next person who wants to buy it. But if no one wants to buy it, then you're left holding nothing. So the next one we're looking at then is looking at property in the United States. And we're seeing 26% of all residential properties that are offered each month in the United States of America are being bought up by hedge funds, paying 5% typically over market. And it's anticipated in the next 3 years, 60% of all residential property in the United States of America will be owned by BlackRock, Vanguard, and State Street, three of the three biggest asset buying firms. Why? Probably because they couldn't buy enough Bitcoin. So there's one thing. The other thing is that moving to what we think, and I agree with Saylor here, we're moving to a fully decentralized economy. And in the legacy thinking, if you have an asset, you can leverage that asset into whatever currency exists in the future. And because you have the asset, and because whoever has the asset and starts that process of money creation in the financial system, they get the greatest value of that asset when they convert it into money effectively. So it makes a hell of a lot of sense that these big asset buying firms are buying up all the US property, because whatever comes next, you want to be holding assets, not fiat currency. And they know that. And so that for them to take their 12 trillion plus whatever and start buying up all the property in the United States of America makes a lot of sense. Lloyd's Bank is doing it here, by the way, buying up large chunks of properties, real estate here in the UK.
But then if the prognosis is that we're about to go into a cycle of recession, depression, or whatever, if there's going to be defaults on properties and that, then is not the more likely thing that they'd be hoarding cash for now in order to wait for the fire sale that's going to come up pretty soon?
Well, that was the usual thinking. And there are a lot of people who try to follow that strategy. Oh, it'll just be like last time, and I'll hoard all my cash and then buy all the distressed sales. Except this time, the cash that they're hoarding is like an ice cube on a hot summer's day. It's melting faster than the distressed sales, if you see what I mean. Okay. So if you have what we think is a monetary inflation rate proportional to the amount of stimulus that we put into the economy in the last 50 years, and particularly during COVID, our true inflation rates, monetary inflation rates, are running here in the UK somewhere north of 25, in the US somewhere north of 68%. Your money is not going to last very long at the bank, only paying, 1 to 5%.
Yeah.
So on that basis, and so therefore they have to do something with it quickly. And increasingly, we're starting to see that where people are making ever bolder moves into what we call the asset-based economy, buying assets. So buying primary assets, not a buying title. Stress here, title of assets, not an entitlement to an asset. Very two different things. So entitlement to an asset is just like a bank. You go to a bank, you deposit £100. What do they give you? They give you a little chit, electronic record, IOU, that says we owe you £100.
Yeah.
And if something goes wrong, there's a chance that they don't pay you that, even though it's your money deposited at their bank. And so it's the same sort of thing with a lot of the BTC ETFs. So in the BTC ETFs, which we were opposed to, they've done effectively a central bank of BTC now. A very hot topic, this one. And bottom line is by aggregating the purchasing of some of the same banks I just mentioned, JP Morgan's et al., they're buying up all the BTC they can, and they're offering retail customers credit to buy BTC. So you go to their ETFs, you say, I want to buy some BTC, and they give you a credit note saying you bought some BTC. All right, if everybody, because of what's called liquidation preferences in the banking financial system, is that if a crash does happen, they'll say that they continuously say for the next 5 to 10 years that they owe you 1 BTC, but you look in the fine print, typically you find that they don't owe it to you in any timely period. They owe it to you when they want to pay you. And so the end result is the BTC that you just purchased or thought you purchased or that you had a share of or that you had some right to on these ETFs doesn't actually truly exist. Coinbase is the same. If you tried to, everybody showed up the same day and asked Coinbase for all their BTC, they wouldn't be able to supply it. And indeed, they changed their contracts to make sure that they were under no legal obligation to do so last summer. So these are the issues, the real issues that we face. So we're moving into what we would argue little biased here, so shut me up when you want to, Gary. We're moving into an asset-based economy where title is all. And the big institutions in America realize that and are buying up all the property. But increasingly what happens in these decentralized systems, so there's some good news here, is in these decentralized systems is people have more direct access to title. Right? Not entitlements, but title. And this is very important. And we think it's very important for everybody, not just for everybody's wealth. And what we're anticipating as an exchange operator, effectively, yes, doing titles of property, is that everybody globally is very interested in getting direct access to the asset class. So effectively make sure that the Asian market who have no freehold in property have some way to secure their wealth. And there are a lot of people right now in the world who are looking to secure their wealth into something that can't be inflated away.
Yeah, I think that's where it is kind of like a new paradigm or a new era on that kind of thing. So it's fascinating as well. You mentioned about Bitcoin ETFs, because there was kind of an assumption that when the ETFs were approved, that the price of Bitcoin would go up substantially. Yeah. And in fairness, it has gone up. Whether it's due to that or not, I suspect it's partly. But partly, yeah. I have a theory which I have no evidence to support, but it's grounded on some understanding that if I understand it correctly, the retail ETFs can't be sold to consumers until they've existed for, I think it's 3 months or something. They kind of they can't sell you a brand new product. It has to have kind of a track record. And so I think the ETF firms have been quietly buying up Bitcoin in the background in order to have the assets that back what the ETF is going to be based on. So I think they've been stocking up already, and that's being part of the movement of the price of late.
Yeah, so, I think you're right there.
Yeah,
that's exactly what's happening.
Yeah, and so I think
I disagree a bit.
Go on, JT. I'm open for the disagreement on this.
Oh, JT's always coming in with something good, so here we go.
Yeah, you know me. So look, BlackRock start to participate on Bitcoin on the top 5 Bitcoin mining companies in the world back in 2020, 2021. I can't remember. Start to get stakes on them. Okay,
I remember they did a lot of FTX as well.
Yes, so they've been buying it for a very long time, and so all the others. So when they announced the ETF, that they were going to create an ETF, they already had plenty of Bitcoin, right? When they continue to buy it, because they're not going to buy when it's high, they're going to buy when it's low, so they can sell when it's high. That's how they make money,
Yeah. Well, you could argue they've been talking it down for years, ready for this moment.
There you go. So these are all assumptions, of course, until we actually dive very deeply into their books. But once you dive into their books, it's a web, because they have participations in companies, they have participations in other companies. It's really a big web.
Well, no, it's quite a web, as we've already just highlighted here, or I was highlighting earlier. It took a long time to unstitch what they're doing with property in the United States, because they're not buying it under their own name. They're buying it through a series of hedge funds and LLPs.
Of course. So they, of course, then with the close to the date for the SEC to approve and so on, everyone else with money, from family office to companies to whatever, they're gonna want to get in the game, and then other players that are not they are not part of their group of companies, they also want to participate. So then Katie Wood, she came and created one as well, and then came others and create. How many ETFs were created after? Of course, that's going to drag a whole plethora of investors, and that's what pushed the price up. But those already came late, the big ones, the big players, they are on it for a long time, So yes, to a certain extent, Gary, and this actually pushed a new wave of investors, qualified investors, what they call it, but it was not because of the BlackRock buying and so on. They have plenty of it already, lots of it.
Because I was taking a look at some of the data earlier on as well, in terms of things like the options. and it seems that it's been a fairly steady state. So hopefully you can see, I've pulled up a chart on here. The open interest derivatives been fairly static in terms of like about, what is it, 100 to 200 billion per month. But the options volatility has been, again, it's fairly steady state. So this is volatility, not actual prices. So yeah, it certainly feels as though it's a little bit more stable than you would have thought and would have expected. But I found this interesting earlier on. I don't know if you can see on the screen up the fear and greed index, which is always an interesting thing. And it's been interesting. It kind of peaked at the point that Bitcoin hit about $73,000 the other day, and it's dropping away a little bit. But I always think that this whole idea that crypto in some ways is driven by fear and greed, but it's fear of the fiat economy and greed in the crypto economy. So yeah, there's certainly some validity in that. So what's everyone's thinking in terms of the Ethereum ETFs that are going through the SEC at the moment? Any sentiments as to whether they are likely to be approved?
Just to add a little bit more to what you are saying, what you continue, remember these guys, they're not going to buy on exchange on open market, they're going to do OTC deals,
Yeah.
They work with Cumberland, the really big boys, to buy, they don't want really to go to an exchange and say, hey, I have a $2 billion here, give me, your Bitcoin, or put orders on the market,
I'm pleased to tell everyone I'm BlackRock who's doing this. They
work for many different reasons, So of course, they have been doing deals in the background for quite some years already. Anyway, you said Ethereum ETF, yeah? Yeah. It's very interesting news about VanEck this week, wasn't it? They sold the whole thing.
In terms of what? I didn't catch that. Tell me more.
VanEck, they sold out. Yeah, they sold. Yeah,
okay.
Yeah, Ethereum Foundation. I think they sold all the Ethereum.
VanEck, they was sold to. I was reading that. I can't remember. I saw some news that they were out. They're going to sell the whole thing.
All of the Ethereum.
Yeah, I'm just checking out their website at the moment, because so VanEck's a global investment company, isn't it?
Yeah.
And that they were launching eFoot. Right, here we go. Let me find the news release on that, because they announced last year. Was that October? In fact, yeah, they're launching the VanEck ETF, which is Ethereum based. But you say they've sold up on that.
There's something about the.
Okay, maybe something to dig around a little bit after this.
Just forget it then. I'll dig it, and then if I find, I'll
pop it in the chat or whatever.
Yeah,
that'd be interesting.
Yeah,
go on, Sebastian.
Yeah, from what I understood when I was reading the news and what Vitaly said, I'm not sure if it's 100% true, but what I understood is that the Ethereum Foundation was using like a decentralized system, and now it's more like a distributed system. So back before it was like how to explain, it was more nodes that were running kind of, let's say, independently, and now it's more like one big node that decides what's happening in the ecosystem. And that what the swap was about, but yeah, I'm not sure, but that's what I understood.
Okay. Yeah, certainly lots of things going on, and there's more and more, because you got Ethereum kicking in with that, and there's some talk about further conversations about the SEC as well, and going back to the history of, was Ethereum a security and should it have registered and all that kind of thing, which I think came out during the Ripple court case. And I think there's still some more to come out on that, because there's some talk about interesting things that had happened years ago. Yeah, so much going on. So if JT finds the details, I just had a quick dig around now. I couldn't find anything about them selling out. Well, let's open it up a little bit wider then. Anyone got anything else that they'd like to share or add or anything? Elena's quietly becoming the guru of all things metaverse.
We always have the Craig Wright case.
Ah, yes, yeah. For those who don't know, Craig Wright, who was claiming he was Satoshi, has been taken through the High Court by, is it COPA? Just the crypto something
COPA,
alliance, yeah. And there's been a court case through the High Court for the last couple of weeks, and interestingly, that the intention was that the judge would do like a wrap up last week and then go away and consider his decision. And apparently, on the closing thing, he made it pretty clear what his decision was going to be.
He gave a preliminary decision which said, "You're not Satoshi. You don't own Bitcoin. You didn't write the white paper," which is very important. Well, a lot of people don't understand it. It wasn't just about Craig Wright and his aspirations to control Bitcoin. It was about protection of software coders in the future, because he was trying to take all the individual coders to task, so he could force them to give basic access to Satoshi's locked up Bitcoin. The Dorsey got involved directly because he realized if a legal precedent was set for something like this, is that the open source coding that's done across the world right now was at peril. If when people do coding in good faith find out that they're legally going to be chased by Craig Wright or others like him, and there's a legal precedent set that they can do that, then that was going to cause a huge problem for the open source movement across the world. So the stakes were far, far higher than just Craig Wright and getting hold of Bitcoin. It was actually about the liabilities that were going to be put on open source coding in the future.
I think you're absolutely right on that. And it's interesting as well. I remember Craig Wright at one of the crypto conferences a few years ago, where he was quite open about his strategy, which was not about technology innovation or making the best blockchain. It was about holding the IP against which he'd be able to get license revenue in the future. And this is the whole thing, that if he could prove that he was the originator, then effectively he inherits some of the IP, which means he gets to charge people who want to continue using that. And exactly as you say, Tony, that means if anyone's done any open source stuff that's based on what Craig Wright could then say is fundamentally based on the IP that he owns, then that just makes it a real world of very expensive pain and would stifle innovation. So I guess that's one of the things he said was kind of a strategy with nChain, was to acquire the IP around this. So but certainly the judge made the preliminary announcements that Craig Wright was not Satoshi, and that hopefully things will settle down from there.
Well, there'll probably be some more noise on it later, because it really depends on how fraudulent the judge viewed his paperwork, but we'll see. So there might be some further cases against Craig Wright in the future, and inevitably he's backed up by quite a bit on himself. So theoretically, I suppose there can be an appeal process somewhere along the stream, or at least in parts of this. So it may not be completely dead yet, but as an initial judgment, it's fantastic for the industry.
Yep, it certainly gives some certainty, I guess, or I was going to say it removes the uncertainty, but I guess logically that's the same thing.
We still have to wait for the written bit, but and there might still be more, but it's pretty resounding. No, you're not. No, you can't. So let's just hope it stays that way.
Yep. Yeah, that's definitely a good piece of news on that. The other thing I was watching as well, obviously Solana's increasing in its overall percentage of the market share at the moment, but we've got the Bitcoin halving coming up in exactly 1 month. It's forecast to be on the 17th of April. So it'll be interesting to see what goes on there. Again, I'm offering the counter market view that I don't think it's going to behave the same time this time as it has done previously. So in previous cycles, it's always gone up quite nicely. Then you've had the halving and it's leveled off, then it's gone up. And I was actually looking at some of the charts earlier on. And I'm actually now convinced it was a pure coincidence of the price move and it's just happened roughly when some of the halvings happened. Because people keep saying, "Oh yeah, well you get the halving and then you get this bear market and then it rises and everything." I think it's the butterflies in the Amazon having more of an effect again. So we shall see. So JT, what have you been up to? You've been to any interesting events lately? Any insights into what's going on in the crypto world?
Not really. I've just been pretty much around London. Just work. But I think I don't know what you guys think about. I've been looking at the markets this week, on and off. This thing about meme coins is like it's gonna stay there. This is not going away. So this is the meme coin season now. I would expect this to continue for a while.
What's this? Meme currencies? You say?
Yeah, meme coins. Now there's like a book of memes.
Yeah. Well,
there's another one, a dog coin that is taking. I mean, the whole thing is just crazy.
I agree, and it's interesting. I think I posted in one of the groups that we're in that the more and more you look at the crypto market being influenced by meme coins, by altcoins, by Doge coins, dog coins, cat coins, whatever coins, it kind of emphasizes what I've suspected for a long time, that actually doing all this, look at the white paper, see what the business proposition is, look at the team composition, look at the technology, blah, 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 blah. It's all irrelevant. It's just a market of absolute random gambling where people are just putting money on meme coins or whatever, that 100x, or even I saw one today, I think it 1000x. There's no amount of reading of white papers that is going to reveal anything like that. So the whole idea of just spraying and paying and putting a few dollars here and there on different things, for those who are interested in putting money into this space, and again, that digs the banner out that says this is not financial, legal, or taxation advice, it seems just randomly throwing a few dollars here and there at these meme coins is probably as good a strategy as anything else.
I always love the expression "spray and pray."
Yeah, someone told me, what was it, on Friday? Someone that you guys, both of you know, that one of his friends put $250 on this new meme coin that is going crazy. What's the name? Oh my God. I'll look up in a bit, yeah, but
Okay.
Pepe, Bonky, or Flocky.
no. I'll look up in a moment. And within a week, he went from $250 that he put on it to $86,000.
Wow.
I was like, it's crazy, absolutely crazy. And I was telling him, tell your friend, there's only virtual profits. He only realizes them when he sells. So these coins, they can go very, very, very quickly down, so.
Well, it's bizarre as well, because I was looking at some of that the other day, and I was realizing how much HM Treasury, certainly for the UK, must be loving all this stuff, because there's all this absolute speculative price increase with no economic benefit whatsoever. But the taxman gets to take X% of it all. It's like, yeah, you want to play with that? We'll have X% of that. And there's no downside risk for the tax authorities, because if you put in $250 and it goes to zero, then the taxable kind of like credit is $250. If it goes up 1,000-fold or whatever, then the tax liability of that just exponentially outstrips any benefit you might get from any losses. So the tax authorities just can't lose. It's like printing money for them. So
it is, and it isn't, because if it depends where the people are. Yeah. So if the people who are making money from this, live outside of the UK, this is money leaving the UK. Yeah, because $250 from you, from me, from blah blah blah, maybe 1 million people. Yeah, that's a lot of money that goes out of UK. You know,
Yep.
there's no tax on that at all. Yeah, and there is a loss for people. So I mean, there are things here that not everything is rosy, if you know what I mean.
Mhm.
I found the name guy wrote me Boom Me, yeah, Book of Meme,
Book of Meme.
There you go. Okay.
BOME. He already reached over $1 billion market cap. It's just
Who
insane.
me? Uh,
That's for sure. So is that being traded on any of the main exchanges?
Well, the Binance, I think yesterday announced they're listing it. You know,
Okay. I was
it
going
was
to
Binance, if I'm not mistaken.
keep on chatting, and I'll have a look at that.
Yes.
hey,
Honestly,
JT, you brought up a very good point, which it's worth referencing here. Probably not terribly interesting for most, but the fact is, increasingly, what happens with USDT and other types of stablecoins in operation is that increasingly the UK's currency is not used in global transactions, and arguably neither is the US dollar. So the less your currency is used by others, the less attractive it is, which of course adds to its inflationary pressures. It's not as attractive, supply and demand. Means that not as many people using it, and if not as many people are using it, then the taxman doesn't get his tax.
Mhm.
And this is a real issue for governments right now. So it's almost when I mentioned the exigent requirement is governments are starting to think hard now that they can't afford not to have good exposure in the digital asset economy or to be a version of digital asset money. That's why you see all of these guys looking at their central bank digital currencies in such intensity at the moment.
But
yeah.
yeah, JT, you're right. I just pulled the chart up. Hopefully you can see it on Book of Meme coin, which started at like 0.000, rocketed up to 28, like 2.8 cents or something. But it's just the sheer volumes going through are like madness, and it's gone up 1,845%. It's like, yeah, that kind of compares quite favorably to most pension plans I know about.
Yeah, and look, I yeah, you were right there about that, Anthony. But one of the things that you have also to look at, there's a rotation going on for a while. You know, a lot of people don't know, but if you're going to look in 2021, uh, where the majority of crypto transactions happened, you know, it was through UK. I'm talking in terms of value. Why? Hedge funds. Okay. So money from hedge funds has been in crypto for a long, long
Oh
time.
yeah.
And
Oh
it
yeah.
comes and goes. It gets out, you know, 1, 2, 5 billion, no problem, out of Citibank or whatever, and gets back in when they get out of the stables. So you know, I remember quite well, in 2021, a lot of times you would see another $1 billion printed by Tether, you know, but
Mhm.
towards the end, you'll start to see, not towards the end, there was a time in the middle, you start to see, you know, burned another $1 billion. That's someone returning back the stables, you know, and give me my money to my bank account again, you know.
Yep.
This happens more than what people think. A lot of people
Mm.
don't analyze these movements between the wallets in the back end. And when you see these announcements that, you know, Twitter is burned or printed, yeah, it's just money coming and going to bank accounts. Now, the rotation is happening more to big hedge funds because of ETFs as well, yeah, and not just hedge funds, funds in general as well, yeah, and um, the taxman doesn't care, you know, as long as the balance sheet at the end of the year is positive, you know, or has increased
Yeah.
of tax, you know, for them it's okay. It doesn't matter if it
Well,
from
yeah, but then
big
on a
players or from small players, yeah.
but on a macro, they're getting ever more desperate. I mean, if you look at the back end, they're hit. The UK government's raised a lot of taxes and put a lot of rates up. I mean, some of the companies' house stuff is up 300%. You know, so they're under briefing all the government departments to squeeze on anything but headline sort of tax rates. And we're
Yeah.
looking at the bondholders the need to feed the bondholders, particularly in the UK, and the middle classes and the normal tax base that used to support that is getting squeezed quite hard. So it's interesting where it ends up. We looked at the U.S. government, for example, is that in 2027, the total receipts from the federal government from all sources was only sufficient to pay the interest on their debt. It wasn't, they're effectively moving backwards. Where do you go from there?
Yeah, but don't confuse one thing, Anthony. You're right about that. Yeah, is one thing is the actual tax revenues. Yeah, what comes in. Another thing is actually, expenditure. Government said if the expenditure goes up, and because it doesn't mean that the taxes are decreasing, the taxes continuously increasing. I'm talking in absolute value. Yeah? It's just they continue to spend more and more. I mean,
but
there's not much you can do about that.
They keep printing more and more to spend more. So
I was going to say that
all over.
that works out okay if you own the printing machine, and if you need to pay the bills, you print some more money. Now, unfortunately, that then devalues the value of the existing money, which ties in with what Anthony was saying earlier on about real depreciation type thing of monetary inflation as well. So it's like that. You look at how much is the US printing at the moment? It's like $1 trillion a day or something. Was I reading somewhere?
No.
It was some fantastically large number. But I was just trying to dig it out before as we were talking. But certainly, you look at the rate at which they're increasing.
Probably $1 trillion a month. There was a point they were getting about that. But if you look at really, it's really you need to look at this from a macro perspective. And if you look back at Japan and what Japan has been doing for years, I mean, we had a 230, 240%, above. And they proved, it doesn't mean anything, you don't have to be below the 100%,
Well, I think there's a challenge in trade, actually, because if your currency is devaluing that rate, it's difficult.
But Japanese money to be okay, they didn't.
They played quite a long game, actually.
They didn't bankrupt, the country continues to do well, continue to grow, they found the balance to do it, So they printed a lot, they continue to print a lot, and they are just there. But I don't think that will be possible in the US because it's a much more complex, society in general, not just economic system.
Well, here's a marker as well. Unofficially, we've been approached at the TPX to ask whether some of the states can create their own currency separate and distinct from the federal government's greenback using title property, RWAs effectively. So, it's not official. It was an official approach, but it was an informal approach from 2 different states in the USA to see if they can create an alternative asset-based economy using title within the state boundaries. With there is precedent for this because they had their chartered banks. They actually have a lot of the rules and regulations by which they could do this quite easily because that actually is still on the books from the last time they centralized the economy in the US.
I was going to say it's
1933 or so.
I was going to say it's only relatively recently, i.e., in the last 100 years, that the US dollar has been the single federal medium of exchange. I mean, prior to that, it was all state-based, wasn't it?
Going back a ways, they had their own state chartered banks, and they had the authority to issue. They had to keep all their gold standard days, at the Federal Reserve. There was a order where they had to. Took a while to do it, but they made it so uncomfortable that they didn't have a choice. And then everything was gold back then, so prior to the 70s. But there's a precedent for this. So if enough of the states feel that the federal government is reckless in terms of the expenditure, then they have an option, they believe, to set up their own currency again.
So that's where it's going to be interesting. Again, there's the intersection of crypto into this. You look at Miami, where I think it's the Miami Council has agreed to accept Bitcoin for payment of council bills, and also has introduced the ability to pay its staff in Bitcoin. So you've got effectively a new form of currency or a new currency almost in its own right. The difference being that that's not state operated or based. It's actually an independent one. So it's interesting, as you say, if they're looking at creating their own asset-based alternative forms of money in some way. So interesting that they're exploring that.
Well, we take a view intrinsic versus extrinsic. So again, we think it's natural that Bitcoin, the technologies of Bitcoin will evolve into effectively RWAs, where you have real world assets backed up, supported by governments with known mark-to-market pricing. And increasingly what happens in that world, if you go fully decentralized, like Zaire is saying, then quite honestly, fiat currency just becomes a common number by which you count these things. And you pay for things asset to asset to asset. You go via Uniswaps and automated market makers, and you never actually convert into fiat currency at all. It's just a number that you happen to use at a point in time where you compare, two different items that you're swapping. And that's it. So things are changing here, but increasingly what we see under decentralized is that the centralized model of control of money is going to be diminished. We're not sure what it looks like at the end, but we're pretty sure that we're moving quite aggressively now to an asset-based economy, of which the Bitcoin technologies will loom large, and Bitcoin itself will still be in the firmament because a bit like gold is still with us now. But we think what comes next that's built off the back of Bitcoin is actually far more interesting.
That's why one of the things that is super cool, in my opinion, a lot of people really didn't look at it. When people start to really look at it properly, I think European Union is going to get a massive boom, and I think it's going to happen within the next 18 months. And the reason is the RWAs is clearly defined in the MiCA, because MiCA has 3 classifications. One of them is the ART, asset reference tokens, which is where all of these goes, not just like it's basically stable and referenced assets, So it has quite a special place in there, it could be because it has a stable value of 1 or more, several commodities, and the other 2 categories, one it's EMT, electronic money tokens, and that's where you get the Bitcoins, just pure money, Bitcoin, Ethereum, and so on. And the third one is the other tokens, which is utility tokens, is where that token as some form of utility. Could be a blockchain, could be a project where the token is really intrinsic because it has a network, is used for subscriptions, whatever. There's a utility of that token. Those 3 are separated. The combination of those 3 is going to do exactly what you said, Anthony. Exactly that,
I'm glad to hear someone being bullish on Europe, because we keep looking at Brussels and trying to work out how that's going to work out in the future.
Oh man, forget about Brussels. You could go to
inability
Estonia.
to pass an audit and all that sort of stuff. So I kind of wonder where it all goes.
Estonia is probably the most advanced country in the world when it comes
very interesting things.
When it comes to anything electronic implemented by governments. Okay.
Yeah, I agree.
Between them and Dubai, I don't know which one, but they could actually. I think probably Estonia is still ahead, but Dubai is catching up very, very fast, So, and there's several countries in Europe already implemented this, so you don't need to go to Brussels to do this,
No, I agree. No, there's a lovely phrase came out of Dubai. This is good. Some guys are down in Dubai, and the phrase that came out, while Brussels talk, we do.
Well, folks,
yes, it's right, but on the other side, and I agree with a lot of that. MiCA was the first law implemented in the world, or first regulation, and Dubai was still talking about VARA.
Well, but it's it's like you're passing AI law without having a single decent AI company operating. So
that's of course. There are many things that are exactly like you said, but I think in terms of asset. RWAs, it doesn't really matter, digital assets. I think Europe, as the law for, it's going to be 1 year in April. already. It was 23rd of April, if I'm not mistaken, okay? Or end of April, I can't remember. But it's 2023 that Mike came up. So anyone could actually start a token. There's banks creating stable coins at the moment across the European Union. And Anthony, whatever you were looking at in terms of doing a property, I mentioned this to you, look at it properly because you can do all of it anywhere in Europe, in any country. You need to do in one country, and that's EU passport that was before doesn't apply anymore. You just need to do it in one country. That's it.
No, understood. It works in many ways within the digital asset industry. The issue is that we're an amalgamation between property law, existing laws relating to the houses we live in, the occupancy rights, all the other rights associated with property, usually built up over hundreds of years in each jurisdiction, and moving it at the speed of a Bitcoin and the efficiency of a Bitcoin. So the value of the house. So we have great fun. We have great fun talking to the property guys and saying, we want to move the value of your house at the speed of light. At that point, they usually go cross-eyed and have what we call cognitive dissonance. Because the concept of moving a house to a bricks and mortar guy at the speed of light is so alien to them that they just can't compute.
Folks, I'm afraid we're going to have to wrap up there. As is often the case with these things, we start getting the really interesting conversation right at the end. But I do try and close these off reasonably on time. But thanks everyone for the really interesting insights there. Sebastian, great to see you coming back, and I hope there's some interesting conversation there. Anthony, as always, thank you for the insights on RWAs, and JT as well for contributing what's going on in the market. Elena, thank you for listening. And for anyone who's watching afterwards, hope you enjoy this. Come and join us next week and join in the conversation. Have a great day, folks. Bye.
Thanks, Gary.